I turned $20,000 into over $500,000 in under 1 month on meme coins. Here's a snapshot of my wallet for proof. Now, this might seem crazy, but it happens all the time. One of my closest friends turned 50K into 3.5 million. And 2 other people I know turned 50K into over 10 million this cycle. As someone who not only knows people who have turned relatively small amounts of capital into millions, but who has been right on multiple occasions myself, I want to give you as many lessons, tips, and general things to know on how you can potentially make a load of money in crypto. I've put together this list of 20 lessons that nearly every single person I know who has made life-changing gains in crypto has followed. These lessons took years to learn, and you are getting all of this condensed down into one video. So if you want to potentially make more money than you thought was possible, then like this video and subscribe to the channel, because I'm giving away all of the secrets that people use to make millions in crypto. Obviously, none of this is financial advice, but this is what I learned and what I and many others have done to make multiple 7+ figures in crypto. So without further ado, let's jump right into it. Starting off, lesson 1 is that holding assets for months or potentially years attributed to the biggest gains for most people who actually made life-changing money. So be prepared to hold for a long time. This goes hand in hand with every study that's out there on long-term investing and who actually ends up with the most money in the end. Lesson 2 goes hand in hand with lesson 1, and that is holding through 80% drawdowns attributed to the biggest gains for the most people who actually made life-changing money. This means that the people who made the most money held through 80 to 90% dips. And this isn't just with crypto. Even companies like Amazon, which is the 4th largest company in the entire world, went through multiple 50% drawdowns on its way to becoming the multi-trillion-dollar behemoth that it is today. So be prepared to hold through the dips and don't get shaken out. Lesson 3 is you need to have patience and control your emotions and not sell too early. This is essential and has been a core attributor as to why the people who made life-changing gains actually made those life-changing gains. So either learn how to handle your emotions, or better yet, take your emotions completely out of the equation by automating your buys and sells. You could do that by putting in limit orders on the exchange that you use, or you can use more advanced software to help you automate things. I'll put the ones that I use in the comments. Or you could join the free Discord, where I have a list of every single resource that I use to make money in crypto. And there will be links below if you're interested. Lesson 4 is do not chase too many positions. Stick with high conviction plays. Most people try to chase too many positions. The key to making massive amounts of wealth is to only have a couple big positions that hit. A handful of properly sized plays made the majority of gains for the majority of people who have made it. Think about how many coins you've bought and sold this cycle. Then realize that most of the multimillionaires wait for the highest conviction plays to materialize, and they go in with size. You will find countless opportunities to make it, and you only need a few plays to really make those huge gains that you want. Just stay in the market and go in heavy when you see those great trading opportunities. And do not rush things. You could 100x your portfolio with 5 trades. If you have enough capital, then yes, you could spread it out over more assets. But unless you are having liquidity restraints because you just have that much in size, you don't really need to be spreading your bets that much. Now, I will admit, it does get to be really difficult to only have 5 or 10 positions at a time. More often than I care to admit, I will have dozens of coins in my wallet. However, when I notice this, I will go through each one, research them, and I'll narrow down my holdings so that I'm not holding dozens of different coins. At most, I only want to be holding 10, although sometimes I might have a little bit more. However, the key to all of this comes down to lesson number 5, which is to allocate based on conviction. So lesson 5 is to allocate based on conviction. And underlying this conviction is your research. I probably had 24 coins in my wallet at the time that I bought the AI token called Opus. However, 25% of my portfolio was in that particular coin because I researched all of them and I had the most conviction in that particular coin. And thinking about it now, I don't know why I didn't have even more in it because my conviction was a 9 out of 10 for it when some of the other coins I really didn't have that much conviction in. I do remember when the AI crypto Tau or BitTensor originally came out, that was a 10 out of 10 conviction for me because of all of the research that I put into it. And for that one, I put a substantial amount of my portfolio into it. That ended up being the right move because it eventually went up 5x. However, I did make a huge mistake with Tau that I'll go over in a lesson later on in this video. For this lesson though, the point is that you shouldn't have dozens of coins or be in dozens of trades unless you have a particular system and a strategy where doing that makes sense. Most people don't though, which is why sticking with no more than 10 main coins at a time that you researched and understand why you're in them and have conviction in will probably be the better choice. Moving on to lesson number 6, and this could be extremely helpful if you are only starting out with a small amount of money, although it does apply to everyone. The lesson is to have a multi-cycle mindset. You could stack just a few wins over multiple cycles and be set for life. You only need one insane play to make it. I had 2 100x trades in my first 4 years and another 100x trade in my second 4 years. Even if I only put 500 bucks into my first 2, because let's say that I didn't have that much money at the time, I would have walked away with $100,000. Then let's say I put $5,000 into the third one because I had the money. Well, then that $5,000 would have turned into $500,000. So basically in 8 years, I turned 6K into $600,000. If you could get just 2 to 5 amazing trades per cycle, you could make millions. Or hundreds of thousands if you don't have that much starting capital. And you don't have to find 100x plays to make it. You could literally make it with just a few 10x trades. Let's say that you divide $10,000 into 5 coins, 4 of which go to 0. The 5th though pulls a 10x and turns into 20K. This is your first win. You do the same with that 20K, putting $4,000 into 5 coins. 4 might go to 0, but the 5th one pops off and you make $40,000 with it. That's win number 2. You put that 40K into 5 more coins and one of them pulls another 10x. That's your third win. You just turned 10K into $80,000 in one market cycle with 3 winning trades. And in this example, you lost 12 trades and they went to 0. And that doesn't happen unless they completely rug and scam you. Normally, you will still have some money left over from the losers. Regardless, in this example, your hit rate was only 20% and you still crushed it. This is totally doable throughout a market cycle. And maybe you get lucky and one of them pulls a 50 or 100x and you make multiple 6 figures. That is possible too. Each cycle has lasted 4 years. So let's say that you do this your first cycle. Next cycle, you start out with $100,000. Following the same exact formula, you'd end up with over $800,000. So in 8 years, you made close to $1 million starting out with 10 grand. Most people don't even make that in their lifetime. And most people in crypto want it all in just one cycle. And that is why they never get it, even if they are 3 cycles deep, because they keep getting too greedy and they never take their money out of the market. If you have a multi-cycle mindset, you don't even need to be on the highest end of the risk curve if you play cycle to cycle. You could secure your wins with the layer 1 cryptocurrencies, which are thought to be less risky. Last cycle, you could have made 100x on your portfolio just by buying Solana and doing nothing else. This cycle, you could have multiplied your portfolio by 25x, once again, just by buying Sol. You just have to have patience, aka lesson number 1, because it takes a long time. Don't rush the process. If you don't want to take on too much risk, stick with L1 rotations cycle to cycle. But don't try to rotate until your thesis pans out. Otherwise, you'll probably just end up chasing pumps. I truly believe that the reason I am where I am today is because I told myself that I was going to give it everything that I had for at least 4 years before moving on. And it wasn't until late into year 4 when I finally made 80% of my wealth and over $1 million, which brings me to my next lesson, which is absolutely crucial to understand. Lesson 7 is that you will make 80% of your wealth within 6 months, or a 6-month period when you are in the markets. And for the rest of the time, you will be either making very little, not making anything at all, or you'll be losing money. Let me tell you what happened with me. In 2017, I got into the crypto markets. In 3 months, I made more money than I have in my entire life put together up to that point. It was the tail end of the bull market, which is known as the euphoria phase. My investments were going up hundreds of percent every single day. It was wild, but I didn't know anything. And in 2018, the market crashed and I basically lost everything that I invested. That is when I decided to take this stuff seriously and dedicate my life to figuring it out. And you know what happened? In 2018, I lost money. I was investing, but I wasn't seeing any return. I hardly made anything in 2019 either. And for most of 2020, I still hardly had any gains. That is nearly 3 years of investing without seeing any return. But then in late 2020, the next bull run started. And from October 2020 to May 2021, I shit you not when I say that I 100x'd my net worth. Then in 2022, I lost money. In 2023, I hardly made a dime. And it wasn't until 3 years later, in May of 2024, that I actually made a serious return on one of my plays where I turned $20,000 into over $600,000, cashing out about 200K of that. Then there was more sideways movement with very little to show for it for months. Then in October and November of 2024, I nearly doubled my trading account. Do you see the pattern here? You will have long stretches of not making any money or even losing money. And this goes back to lesson number 2, which is that most people who made it held through 80% corrections where their profits fizzled away. But then eventually there's a partnership, there is an announcement, there is a tweet, there is something that sparks off a monumental rally where your investments just go absolutely wild. Trump winning the presidency and being pro-crypto sparked the rally in 2024. And the majority of gains happened within 3 to 6 months of a coin going crazy. And if you're in the trenches trading coins, you might make most of your gains in just a day or two. The point is that the 80-20 rule applies with trading and investing too. You'll make 80% of your gains within 20% of your trades. 80 to 90% of the time you're in the market, it's going to be boring. And you'll make 80 to 90% of your gains in 10 to 20% of the time that you're in the market. And if you want to do better than that, or if you want to know when to have the best opportunities in the market, then you really need to know and understand the next lesson. So lesson number 8 is to deeply understand the concept of market cycles and always keep in mind where we are in the current market cycle. Honestly, this is probably the most important thing that you can know when investing. Bitcoin has gone through 4-year periods per market cycle. Knowing where we are in the market cycle will be your best indicator to know how much risk you should be putting on. In other words, if you know that we are nearing the top of a market cycle, then you should be limiting your risk, limiting the amount of money that you are putting into the market, and be actively taking money out of the market. If we are nearing the bottom of a market cycle, you should be taking on a lot more risk and be actively putting more money into the markets. Knowing where we are in the market cycle will also let you know whether it's a good time to go in heavy on huge dips, when to take your profits, where to put your stops, and so much more. Most people do the exact opposite of what actually makes the most money. Instead of buying when prices are low, they wait. Then they see the gains that the people who bought during the market cycle lows are making, and then they buy in after the majority of gains are already made. And then when the prices tank, they sell and they leave. To succeed in anything in life, you need to do the opposite of what most people do. Most people are broke. To be rich, look at what most people do and do the opposite. Most people are sick. To be in excellent, thriving health, do the opposite of what most people do. If you are ever wondering where you should start or how to make it in a particular arena, Just think about the people who don't make it and do the opposite. Most people weren't investing back when Bitcoin fell to 4 grand. I sold my car that year to put more money into crypto. Same thing happened when Bitcoin crashed to $16,000. So bringing this back around to lesson number 8. Most people have no idea about market cycles, and that is why they get burned in the markets. So learn and deeply understand market cycles. I have an entire series that you could watch for free that covers 80% of what you need to know about market cycles. I'll have a link for that below. So make sure you grab that before exiting out of this page. Now, let's move on to the next lesson, which flows directly from this one. Lesson 9 is to pay attention when no one else is paying attention. By the time everyone is paying attention, it's too late. You've already missed out on the majority of gains. You need to figure out how to play the game before things go crazy. You would never enter into a boxing ring with someone who knows how to fight without learning how to box and practicing first. When you enter into the market as a complete newbie, you are going against the best of the best. People who have been in the trenches for years, for decades. You really think that you're just going to jump into the most aggressive arena in the world and leave unscathed? 90% of traders lose 90% of their portfolio within the first 90 days. Think about that. To win in the markets requires you to be a contrarian. This means that you have to do the opposite of what the masses are doing. When the majority of people are too scared to buy, that is usually the best time to buy. When the masses start piling in and the markets are going euphoric and the people who have no idea what they're doing are making loads of money, that is when you need to be doing the opposite of all of them and start selling. Moving on, lesson 10 is do not trade with leverage until you know exactly how it works. And never use so much leverage that you risk liquidation. Liquidation is when you lose 100% of your money. This should never happen. You could lose 80% of your portfolio and still come back and win. But if you lose 100%, you can't come back from that. That is why you should typically only trade with what is known as spot. By sticking with trading spot, you will never be at risk of liquidating your account. This is incredibly important because there are multiple 80% drops in almost every coin. Even the ones that go up 50,000%, there are still multiple 60 to 90% drawdowns in these coins. One of my best friends put $50,000 into a coin called Popcat and saw it go all the way down to $8,000. But he held it and it eventually went up to $1 million. It then dropped again and he saw that million drop to under $400,000. He was probably shitting his pants when that happened, but he followed lessons 1 and 2, held his bag, and now it's worth over $3 million. If he used any leverage at all, his entire account would have been liquidated and he would have nothing right now. But because he bought using spot and he didn't use any leverage, he now has millions. And as a personal story, I remember buying hundreds of Ethereum back in 2018 at under $100 per ETH. But because I used leverage, the price ended up coming all the way down to my liquidation price on a scam wick that it lasted literally 1 minute. And I ended up losing everything. The sad part is that I could have just bought 100 ETH without any leverage, not done anything, and made an insane amount of money. But because I used leverage, I ended up with 0 on that trade. So you do not need leverage in order to make absolutely insane gains in crypto. However, I will say this, that if you learn how to use leverage, which is something that I teach at Cryptolete.com, you can multiply your gains significantly. If you do use leverage, it's best to keep it to under 20% of your overall portfolio. And seriously, only do it if you have a full grasp of how to use it and properly manage your risk. Because one wrong click and your account can be wiped out. Speaking about learning from others by taking courses or getting mentorships, lesson 11 is for those who want to do exceptionally well. And the lesson is, be completely obsessed and put the hours in, or follow experts who do. Like I mentioned, there is a course at Cryptolete.com that teaches you every single thing that I know and that I have used to make millions in crypto. If you want to become an expert trader and crypto investor yourself, you can go through that course. But if you don't want to put the hours in, then you could join a group like the Cryptolete VIP to get the trades and the cryptos that I'm buying and selling based on the 8 years of experience that I have in this market. I posted about Caspa in there, which did 100x. Opus was posted in the VIP and that went up 20x. And I posted about KeyCat and that one went up 60x. Plus, there are trades every week that are posted so that you know the exact prices that I get into and out of cryptos. We've had members grow their accounts to hundreds of thousands of dollars, and a lot of people end up making the cost of the VIP back in their first trade. So that is available at cryptolete.com/VIP, and I'll have links for that in the description if you want to join our community. It's a solid group of professionals, not a bunch of 15-year-olds, and so we like to keep it professional. So if that does sound like something that you'd be interested in, definitely check that out. Now, let's keep going with the lessons and move on to lesson 12, which is incredibly important. Lesson 12 is to have a process and a system for choosing the coins that you will trade and invest in. Now, I have not seen people give out their exact systems, but I don't like to gatekeep. So here is a full system that you could use. You could start your trading day or your research by tracking the relative performance of the different coins and categories. This will let you know what coins to potentially put your money into. The 100x play I made this cycle was with Caspa, or CAS for short. While everything was tanking in 2022, CAS was making new highs. Its relative performance was better than everything else. This is one way to know what has potential. And this is part of a system. I think it's important to judge based on performance, not just fundamentals. You could see what the best performing coins are over the last month, last 3 months, last 6 months, or last year. You could buy them on the next dip because the best performers tend to stay the best performers. For example, Sol was the best performing L1 in 2021. It was also the best performer in 2023. It was also the best performer in 2024. CAS was the best performer in 2022. It was also the best performer in 2023, and it performed amazingly well in 2024. Think about what happened with meme coins this cycle. Doge was the best performing coin in 2021. Memes were the best performing category in 2023, and they remained the best performing category in 2024. You have people who are so dogmatic and have such big egos that they refuse to acknowledge what is happening right in front of them. So they stay in the coins that continue to go down or underperform. You need to be fluid enough to be able to adapt. There were coins that I used to be really passionate about, like Quant, but they weren't performing. So I dumped them and I put my money into coins that were performing better. And guess what? The coins that were performing better continued to perform better. My personal strategy is to, number one, find the sector that is performing the best. Second, I take all of the coins that are in that sector and I see what are the top 5 that are performing the best. I then set trades on those coins using my trading cheat sheet checklist that I created. This is literally just following the steps that I wrote out and setting up the trades so that I buy the coins at the best prices. I will also do research into the different coins in that particular sector and get a good understanding of the fundamentals of the different projects. I'll look at things like their community, the technology of the crypto, the roadmap, and if they're hitting milestones, the team, and many other factors. If you want to know every single thing that I look at when researching a coin, I lay all of that out at cryptolete.com. I'll try to make a video about it, but it is a lot and the bull run is already here. So honestly, you don't really have a lot of time. Whatever you do with that information is up to you, but I'm just telling you that the longer this goes on and the higher things get, the riskier and riskier things will get. So if you want to really take things seriously, you should dedicate everything you have to learning everything you can as quickly as you can, because this bull market won't last forever. This video you're watching right now has tons of information in it that would have made me and saved me millions of dollars. So it's a great place to start with. Now, let's go on to the next lesson. Lesson 13 is to think of past data and use that to guide your investment decisions. What made the coins that went up go up? How can you use that information to predict the future? Think of Doge being the biggest gainer out of any crypto ever. What category was it? It was a meme coin. What type of meme coin was it? It was a dog. Okay, so the next cycle, when you see Solana outperforming every other asset and you see more money flowing into Solana than any other ecosystem, what do you think will be the best performing coin within that ecosystem? Probably a meme coin. More specifically, a dog meme coin. What's the dog coin on Solana? It's Bonk. And of course, there was also WIF, which is dog with hat, that also did insanely well. Bonk has gone up over 33,000% since it was listed on a public exchange where anyone could have bought it. This way of thinking, where you think about what has happened before and what is most likely going to happen in the future, is called multi-level or downstream thinking. A real-time example of this type of thinking that I'm personally implementing into my strategy is thinking of how Base Chain is the chain of Coinbase, the #1 exchange in America. Brian Armstrong, the founder of Coinbase, is talking with President Trump, who is the most pro-crypto president of all time. Coinbase has an entire report talking about how it wants to onboard millions of people into the Base ecosystem through the Coinbase wallet. So, knowing all of this, I'm thinking that in the future, the same type of coins that have done the best on other chains, such as Bonk on Solana or Dogecoin, will also do extremely well on the Base chain as Coinbase works to onboard more people. So I'm buying those type of coins on the Base chain now before they potentially pop off. This is how you can use past data to come up with a thesis as to why the asset you're investing into will do well into the future. My main play using this thesis is Ski Mask Dog, or Ski, on the Base chain. Lesson 14 is to study charts and the crypto market in general 24/7. If you are not in the trenches with this stuff, it is really hard to know what to do. For instance, what made the L1s like Solana or Sui succeed? What made the memes like Doge, Bonk, WIF, and Popcat succeed? Can you find other coins that are similar but have not gone up 30,000%? Understanding what made other coins successful is what will give you the conviction that you need in order to follow lessons 1 through 5. If you could confidently say, this coin has exploded because of this, this, and this, so this other coin should explode because it not only has the same things as the first one did, but it's better because of this, this, and this. Imagine the conviction that you will have and how much easier it will be to go in with size and hold through those inevitable drawdowns if you can clearly articulate your reasoning for owning that asset. Michael Saylor does an incredible job of this with Bitcoin. He's probably come up with over 100 reasons why he holds billions of dollars worth of Bitcoin. So you should be able to come up with at least 3 reasons why you're holding your altcoin. Maybe the tech is an order of magnitude better than the other options. Maybe the team is exceptional and has launched multiple winners in the past. Maybe the coin has really good viral name and it has really great marketing. There are countless reasons as to why an investment might be a good decision. It is up to you to find them. Or you could join a group where experts look through the coins and pass them through filters and then simply give you the ones that they feel strongly about. Along those same lines, sometimes a new narrative is formed and coins within a certain category start popping off. If you aren't locked into the markets, you will never be at the cutting edge of new trends and narratives. I knew that meme coins were the move because I was paying attention to the market and could see that they were the ones that were popping off. The same goes for AI, and same goes for the autonomous agent AI coins. By staying up to date with what the market is doing, you can allocate accordingly. That is why I put my money into KeyCat for the meme coins and why I put my money into Opus for the autonomous AI trade, both of which printed 6 figures. If I wasn't paying attention, I probably would have just stuck with utility tokens. Funny enough, while I'm making this video, utility tokens are actually making a comeback. So now I'm putting my money into them. One project that I just invested into today is called Ayuki Labs. They are building out a network that machines could use to help them navigate through the world in a better way compared to the GPS navigation systems that are currently used. So you have to stay up to date with what is happening in the markets. Or if you don't have time, you need to either stick with Bitcoin because that is really the only coin that has shown to have long-lasting power, or you need to follow people who do put in the work and who do put in the hours and who understand the market. In lesson 5, I said that I made a mistake with the AI token Tau. Well, that is where lesson number 15 comes in. And that is, do not sell your high conviction plays too early. You need to let your thesis fully materialize. Don't hop around and rotate from one thing to the next. Stick to a thesis you could see fully through. Yes, I made some profit on Tau, but I could have made way more if I didn't sell too early. So that is lesson number 15. Lesson 16 is to take the time to find an edge in a particular area. Whether that is trading meme coins on DEXs, trading on centralized exchanges, understanding narratives, or something else. Whatever it is, master it. Then, if you could automate that, it could free up time to move on to the next thing. I went the route of mastering trading first. Then I learned leverage trading. Then I learned how to trade on decentralized exchanges and catch narratives early. It took me a solid 5 years and 2 market cycles of trading before I really got it down. But I stuck with it, and now I know that I'm confident in my ability to judge different trade setups in different market conditions so that I risk more when the market is more forgiving and I risk less when the market is not giving me the conditions in which I do extraordinarily well. So lesson 16 is to find an edge in a particular area and become extremely competent in it. And if you don't have time to learn a particular strategy, then network with people who are really good at one. Usually you could join groups or masterminds that are particularly good in different areas. Now, for this lesson in finding an edge, it's one thing to think that you have one. It's a completely other thing to know exactly what your edge is, why it gives you an advantage, and that it actually works. So the second part of this lesson, if you decide to create your own edge, is to objectively define your edge in writing in as much detail as possible. This helps you to really understand what gives you the advantage over the market. If you do not have an edge, you might get lucky, but you will eventually lose to people who dedicate their lives to this. Remember that you are going up against the brightest, smartest, and wealthiest people in the world. There's an OG crypto saying that goes, "They are here to take your Bitcoin." I've seen people make and lose hundreds of Bitcoin throughout my time in the space. So make sure you know what your edge is, or else the people who do have an edge will take your money. Now, if you do not have an edge, and you are not going to be part of a group that has an edge, then lesson 17 is to find one person who made it and follow their advice and their edge to a T. Now, this does have one caveat, which is that you need to understand it on a deep level. People could teach you things and you could learn things, but to fully grasp the reasons why things work requires going deeper than just the surface. You do not have to try to reinvent the wheel, but you should know how the wheel works. And when you are learning, stick with just one person. Yes, learning from multiple sources is great, but if you are attempting to master something and you have a course that teaches you it, then stick with that course and practice the material in it over and over again until it becomes second nature. As you continue your journey, you will then be able to add more to your knowledge base and create more custom strategies that you could think of. One thing about using other people's ideas though, is that you could use other people's ideas, but run them through your own system. What do I mean by that? Well, firstly, go through the charts and make sure that whatever you're learning actually works. But also, if you are learning something like scalping that requires you to be in front of your computer for hours at a time looking at the charts, and you do not want to do that, then learn a different system. I like to swing trade because it gives you the most gains with the least amount of time. That is what works for me, and I teach that strategy along with others in my course at Cryptolete.com. But you need to find out what works for you. You also need to have your own position size based on your own comfortability. When trading, it is typical to risk 1 to 2% of your account per trade. Some people like to risk 10%. In other strategies, like the ones that I talked about in rules 1 through 5, you're risking 20% of your account per trade on 5 different trades with the hope that you will 10x one of them. Although that is completely different than the typical risk management of a trader who uses technical analysis like how I do in my trading account, it is still a totally viable and warranted strategy. You need to determine what you're comfortable with and what system you want to follow. And of course, you could be like me and have multiple accounts for different strategies. Whatever you do is okay. Just understand what you're doing and have a system or systems for each strategy. Remember, you're trying to build skills that you will keep for the rest of your life. Lesson 18 is to network. You don't really have to, because if you're smart enough, you could probably figure all of this out on your own. But you won't be catching as many trades or taking advantage of as many opportunities compared to if you had a network of people that share ideas. For instance, I wasn't too familiar with Popcat until my friend who made millions from it told me about it and his thesis around it. He saw that Solana was becoming the #1 chain and everyone was trading there. He also made the prediction that cats will become super popular the same way that dogs like Doge, Bonk, and Whiff did. Because of him, I was able to use my trading skills and technical analysis to make some really good trades on Popcat. And you don't even need to be friends with people to get really good ideas. I watched a YouTube video midway through 2024 that talked about Coinbase's plan to onboard millions of people into crypto using the Coinbase wallet and Base chain. That is what turned me on to the Base chain. And eventually I bought a coin called Ski Mask Dog on Base, which I talked about, and it ended up doing extremely well. So lesson 17 is to network by either watching videos, joining groups, following useful accounts on x.com, or joining masterminds. Just doing something where you could get potentially useful information, I feel, is very important. Because there is so much going on in this space, it's impossible to know everything. And a good tip for this is to get really good at something and doing something in the crypto space, and then give that information out for free. Because then people who know things that you don't know will see it, and you might end up networking with them, and they might end up sharing good information with you. Now, lesson 19 is to decrease your risk as the market goes up. Most people increase their risk as the prices go up. They put more money in as the prices move up, when what you should be doing is taking money out of the markets as the prices continue to move up. This is how I was able to sell near the top of the last market cycle. I would take money out as the prices moved up, and that saved me hundreds of thousands of dollars. Don't reinvest your money into new coins. Just take it out of the market entirely. Or maybe just put all of it into a long-term account that only holds Bitcoin. And trust me, when I say only Bitcoin, nothing else. The market will take your money if you don't take it out. You will not catch the exact top, and the prices will keep going up after you sell. This is really, really important, and something that I've seen so many times. Even some of the best traders in the world fall victim to this. They will take their money out of the market and the prices will continue to go up, and then they will just buy back in, and that has ruined them. So when the prices keep going up after you take your money out, do not reinvest it. Reinvesting profits has been the downfall of many, many investors. And now lesson 20 is the last lesson in this series. And this lesson is something a little bit different. It's not about making money or finding an edge. It's actually about your mental health. When you are trading with your money and you could potentially lose all of it, you need to have a very different mentality compared to if you are in a job where you get a salary. Trading and investing is such an emotional roller coaster that if your mental health isn't there and you don't have a good outlook on life, it could cause you to do some pretty crazy and potentially harmful things. Money isn't everything, and opportunities to make it all will come many times throughout your life. The real lesson I want to end this series with is this: be grateful for what you have now. This holds especially true if you're healthy. If you have your health, then you have everything that you need to make money. There is a saying that goes, "A man with his health has 1,000 dreams. A man without his health has but one." As someone who has been hospitalized and was in extremely poor health when I was younger, I completely understand this quote. So whenever I have a losing trade or something happens and I end up losing a ton of money, I always remind myself that I am healthy and I am capable. And I have so much to be grateful for. So don't get caught up in the money game to the point where it literally takes over your life and you end up completely neglecting your health. Yes, look, there might be a 3 to 6 month period of time, possibly every 4 years in crypto, where you should be going all out, and maybe your health does take a back seat during those times so that you could capitalize on as many opportunities as possible. But for the vast majority of time, take care of your health, eat right, get enough sleep, get some sunlight, and exercise. And that's gonna do it for this video. I really hope that you learned a lot. So in summary, be prepared to hold for a long time. Be prepared to hold through 80% corrections. Have patience and control your emotions. Stick with a few high conviction plays. Allocate your portfolio based on your conviction, based on what research you do. Don't think that you have to make it all just in one cycle. You have multiple cycles to make it. So have a multi-cycle mindset. Know that you're gonna make 80% of your money trading in 20% of the time that you spend in the market. Understand market cycles and always know where we are in the current market cycle. Pay attention when no one else is paying attention. Don't trade with leverage until you master it. Be obsessed and put the hours in, or follow those who do. Have a process and a system for choosing the coins that you will trade and invest in. Think of past data and use that to guide your investment decisions. Do not sell your high conviction plays too early. Take the time to find an edge in a particular area or follow people who have an edge in the market. Network. Decrease your risk as the prices get higher and increase your risk as the prices get lower. And don't neglect your health, both physically and mentally. Thanks for watching, and I'll see you in the next video.